It's one of the biggest questions in finance today. Is Bitcoin a real hedge against chaos, or is it all just really, really good marketing? Let's get into it.
So it usually starts like this. You see the headlines everywhere. Inflation's running hot, and the price of everything just keeps going up. Then you start hearing these whispers, a little bit of instability in the banking system, and it makes people kind of nervous about where their money is actually safe. And all at the same time, you see central banks printing trillions of dollars, which could, of course, devalue the very currency that's sitting in your pocket. And right in the middle of all that noise and uncertainty, you hear this phrase. It's almost a rallying cry. Bitcoin is the hedge. Bitcoin is digital gold.
Okay, but is it really? Does Bitcoin actually deliver on what its biggest fans claim it does? Or is this whole story more hype than reality? To figure this out, we first have to get on the same page. What are we even talking about here? What is a hedge actually supposed to do? Well, to put it simply, a hedge is kind of like financial life insurance. It's that one asset that should hold its value, or even better, go up, when all your other investments, like stocks, are taking a nosedive. For centuries, gold has been the classic go-to hedge. So the theory for Bitcoin, what people call digital gold, is that it should do all the same things just for the digital age. It's supposed to protect you from inflation, currency failure, and financial crises. That's the promise, anyway. So that's the theory. Now let's put it to the test with some cold, hard data. How does Bitcoin actually behave out in the wild? All right, this is the key. This is the big test. If Bitcoin really is the hedge people say it is, we should see its price go up when the stock market goes down. So, what does the evidence actually show us? And this is where that theory runs into a bit of trouble. Because historically, when stocks have crashed, Bitcoin hasn't been a safe harbor at all. In fact, it has often crashed even harder. It tends to move with risk, not against it. And here's the real kicker. In 2022, inflation was surging. This was the exact scenario where an inflation hedge should have been the star of the show. And what happened? Bitcoin's price collapsed by over 60%. So when you look at how it actually moves, its behavior looks a lot less like stable, boring old gold and a whole lot more like a speculative, high-risk tech stock. So if that's the case, what is really driving the price? This brings us to a totally different theory, one that might actually explain Bitcoin's wild swings much, much better. And it all comes down to liquidity. See, it seems like Bitcoin doesn't thrive in chaos. It thrives when financial conditions are easy, when interest rates are low and there's just a ton of cash, liquidity, sloshing around the system. Investors get brave. Their appetite for risk goes way, way up. And that's when money floods into assets like Bitcoin. This places Bitcoin firmly in a category we call risk-on assets. These are pretty much the opposite of a crisis hedge. They do well when times are good and the system is loose, not when it's tightening up or falling apart. But hold on, the story isn't quite that simple. There's another, more nuanced argument for Bitcoin as a hedge, and it offers a very different kind of protection. This argument goes right to Bitcoin's DNA, to its core design. Its supply is mathematically capped, so a central bank can't just print more of it. It's a borderless, self-custodied asset that runs on a decentralized network, which makes it incredibly hard for any single entity to seize it or censor it. These aren't just tech specs. They are a fundamental break from the traditional financial system. So maybe we've been asking the wrong question all along. Is Bitcoin a hedge against a temporary market crash? The data says not really. Its track record is pretty poor there. But could it be a hedge against the entire monetary system itself? Against a currency collapse, hyperinflation, or a government putting on strict capital controls? Now that's where its unique properties start to look incredibly relevant. It's a different kind of insurance for a very different kind of disaster. Okay, so we've looked at the theory, the messy data, and the counterargument. So what's the final verdict? What is Bitcoin really? The truth is, Bitcoin kind of wears a lot of different hats. It is a genuinely scarce digital asset. It's also a trade that's super sensitive to global liquidity. It's a massive, ongoing monetary experiment. And let's be honest, its price is heavily driven by speculation, narratives, and pure hype. And what this all means is that the answer to our original question really depends on your time frame. If you're looking at short market cycles, a few months, a couple of years, it behaves like a volatile tech investment on steroids. But if you zoom out and think over a span of decades, well,
It just might grow into that digital gold roll after all.
I think the crucial point is this. The biggest mistake is trying to force Bitcoin into an old box. It's not digital gold yet. It's not just another tech stock. It's something new. It's really in a category of its own.
And that's really the bottom line. Bitcoin is this brand new invention, and the entire global market is participating in this real-time, high-stakes process of just trying to decide what it's worth. No one knows the final answer, and that is exactly what makes it one of the most fascinating assets in the world today.